Okay, welcome to a capital hungry breakdown and educational webinar about gold. Okay, so there's a lot of new members who have joined recently. We are just gonna slowly be going through the value of gold, some of the history behind it, how it came to be, what it is today in the markets, and why it holds value, why it's a safe haven, and then how we can use this information with technicals um, over the next 20 years probably to make a shit ton of money. Okay, so pretty much everyone knows that gold is a safe haven, but most people don't even know what a safe haven is. From an investor perspective in smart money, when when risk is extremely high on the market, there's an extreme volatility or fear in the market. Investors in smart money or institutions globally, even just countries globally, they move their money into areas that would be safer during these risk periods, right? That's how safe havens are formed. For example, Japan itself, the currency JPY, the yen, is a safe haven due to the economic growth and structure that Japan has held over decades. So Japan was always seen as a very strong economy, always very sturdy and stable with very good inflation and very good GDP. It just recently has shown signs of recession, just like any country will have those phases. But that is the reason why JPY and yen is a safe haven. The reason why gold is a safe haven is because of its historical value as a physical precious metal. It's a real physical item that can be held, sold, kept in case the world ever goes to shit and you go back to trading things for gold coins when you know what I mean? It has a historical value where once upon a time, you like trade was still very when trade was still very new, you were going to the local market to go eat and trading some gold coins that you worked for some bread, right? Eventually, you got banks that were formed, and then eventually, people couldn't carry around so much gold to exchange for goods. You don't want to carry around 5 pounds of gold to go buy a house, right? Or to go buy a horse. Like I'm talking history right now, okay? You didn't want to do that. So what did they do? They created paper notes that was backed by physical gold. That is how money was originally formed before we had all this debt, before central banks started printing money out of the blue because there's so much debt and they're so corrupt, and that's how it was supposed to be, right? An example of this is the US dollar was originally backed by gold bullion, originally backed by physical gold. You once in the US were able to take a $20 US bill, go into your bank and say, I want physical gold in exchange for this. And they would have that stock and supply and have to give it to you because that is what the value of money was based on, right? Due to inflation, due to corruption, due to greed, how our world runs, there was no longer enough gold for the amount of money that was being printed. So now when you look at a US dollar, it says loan of the Federal Reserve loan. It's no longer backed by the US dollar. It's just money being printed by the Federal Reserve that really has no backing. That's why we've had these financial collapses. And during these financial collapses, because gold has always held its physical value, investors put their money into gold spot and physical gold during these times of volatility, right? Because of the historical value it has, because of how long it is held in our markets and how money was originally meant to be backed by gold and our central banks and all that. That's a whole different story about how the central banks are corrupt and printing money out of thin air and inflation's fucked and how they're fucking our economies and how they do all this shit to repeat history and they never actually fix anything. Because the same stuff I'm going to show you guys that's happening now with this inflation in gold price, from which we can see from $1,000 just barely 5 years ago to almost 1,700 at a peak. This happened during the 2006 2007 financial collapse or the credit crisis, or was it the mortgage collapse? Then regardless, it was the same thing, right? Inflation and everything was too high. The numbers weren't adding up. The U.S. budget deficit was far too large, right? And everything was just backed by nothing. Everything was built on bullshit. Fucking, if you watch the movie The Big Short, and if you're not interested in studying this stuff, the movie The Big Short explains that theory very well. How everything was built on bullshit and run on corporate greed, right? Great movie that explains When that financial collapse happened during the Big Short, gold inflated heavily because of its safe haven appeal. Okay, so gold is heavily run on market fear or greed, and that is why it has value, because back in the day, everything was originally bought with gold coins or precious metal coins, right? And then you had paper notes to say, okay, this paper note right here is worth 20 ounces of gold, because people couldn't physically carry around that much gold. You didn't It wasn't mobile, it wasn't convenient, it wasn't accessible that way for trade and for stuff like that. That's what paper money came from, right? But corruption led to money no longer being backed by gold, especially in the US. Now it's just Federal Reserve loans. Even the money you cash Americans have in their pockets that they think is theirs is actually a loan from the Federal Reserve. You owe them that shit in the long term when they need to get their money back. You know what I mean? It's a fucked up world, but we live in it. So people try to get as much money as possible so you can live free and live a good life, get that financial freedom. But that is just a quick history on gold. So it's a physical precious metal. It's held its value through time. Money was originally backed by it. It's run on very strong market fear and optimism. So when the market is in fear mode for whatever XYZ reason, whether it's a financial collapse, mortgage crash, right? Whether it's Y2K, 9/11, whether it's a trade war, coronavirus, SARS, anything that brings fear to the markets, investors, usually smart money, in different countries, will start to increase their gold holdings from what they can. Okay, gold is also physically mined, so the supply and demand of gold is impacted that way. That is why when there aren't negative tensions that are impacting AUD, Australia has huge deposits of gold, and it has a very has a very rich gold mining industry and business. Okay, if they didn't have all the negative volatility connected to China, AUD would be extremely strong just from their gold exports that they're doing in all these countries that are buying gold from them during these volatile times. Mainly China was buying gold from AUD, okay? But whenever China has negativity in their economy, whether it be trade war or coronavirus, investors directly price in that negativity to AUD and NZD, which are close trade partners and economic partners with China. Okay, they work very closely hand in hand. China is almost like its boss, to be honest with you guys, right? So any negativity impacts them. But anyways, so the physical supply and demand of gold is very important as well. An example of this, let's just say, because this is a precious metal mineral, comes from the earth or comes from asteroids, the science behind it, whatever, right? Let's just say an asteroid hit the earth, or okay, let's rewind a little bit. Right now, what I was looking into that's going to be a huge business is space mining, and this is really interesting to talk about while we look at gold. Okay, there are rich motherfuckers out there right now who are auctioning off asteroids and are trying to develop the technology to fly out to these asteroids, mine a bunch of like metals, iron, like whatever is on this asteroid, different minerals, resources, metals, gold, right? Like some of these asteroids have 10 times more gold in one area of the asteroid than the entire supply of gold on Earth. You know what I mean? So how does this come into relation with what I'm talking about? Let's just say in the near future, a new precious metal is found that's very low in supply, and we start doing the space mining shit, and they bring tons and tons of gold from space, 10 times the amount that Earth has, and they bring it down here, right? Now the supply of gold is heavily increased. It's not as hot of a commodity anymore, right? The supply is so much that the price of it is just inevitable. It's going to drop because there's so much of it. You know what I mean? It doesn't hold that rarity anymore. And that's a real thing. If you guys are bored, search up the space mining thing. People are paying billions to trillions of dollars to own asteroids already, but the payout if you can mine them would keep your family rich for like 1,000 years. You know what I mean? The amount of if the Earth was just sustained that long, it's crazy. People are buying these asteroids and all that stuff. But anyways, so because it's a physical, mined, hot commodity, it also is heavily impacted by real world supply and demand and the mining of it as well. Okay? So the mining of it as well and all that stuff. And then you have the safe haven appeal of it. and how it's run on fear and greed from the historical perspective I was telling you guys, and how investors put their money into that. Okay? When you are lining that up and you understand that now, you understand that, okay, what Jeev is saying makes sense. Whenever the market is extremely fearful, there's extreme economic uncertainty, people put their money into gold. Now you understand that fundamental perspective. Look at how those fundamentals in real world economics and what's really happening in the world, that is what paints this physical picture on the chart. Okay? This monthly chart that trended for 3 years of gold being straight bullish wasn't because there's engulfing candles. It's because there was a financial collapse in the US that crippled the entire world. So what investors could do to save the money they had was put it into gold to inflate the price and then be able to cash out of that gold and then put it back into the economy. What is exactly what we're seeing build up soon and building up now. Okay? The fundamentals in the real world economics behind gold or oil or the US dollar or the US stock market comes before the chart. So when you have an understanding of these political tensions and what they're leading up to or what they can present on fear or optimism, you have more confidence when you line that up with the trends in the key levels that are right in front of you on the chart. This bullish trending market where you had price just create support and run this trending market was during the fundamental financial collapse. It makes sense, right? Then when the market years later, 4 or 5 years later, finally started to rebound, like the US economy finally started to rebound, that gold that was being bought from, let's just say 800 an ounce to 1800 an ounce gets sold off. Almost 50% of that volume gets sold off. What do you think happens when that volume is liquidated? Exactly what's happening now. It goes back into the US market and US equities to level off the economy, where then it ranged in this range from 1100 to 1300. Okay, this was the financial collapse period. This was when the economy started rebounding because you had extreme rate cuts. Those rate cuts, similar to what's happening now, those rate cuts start to take effect into the economy. They start to rebound the microeconomy. People are getting jobs, spending money, getting loans, and spending that money, circulating it into the economy on a higher time frame. Central bank on a on a central bank, country, institutional perspective, all that gold that was being stocked up gets sold off, and that money gets dumped back into government bonds, right? Treasuries, equities, and stuff that will further help strengthen the economy. Okay? And then we had that period of consolidation where the economy was fairly neutral. You just had some like periods of downside, periods of upside, nothing crazy, nothing that matched this, right? Until we had fundamental validation in the last year, 2018, where China began its whole plan here and the trade war started. Okay? So now you guys understand how gold works, how investors view it, its safe haven appeal, the physical supply and demand of it, how it trends and paints a picture with the chart in front of you, right? Like how it paints a picture and paints these individual candles, whether it be 30 days of data, a year worth of data, a day worth of data, that's physical real world price. And you can see how gold is such a great economic indicator because when you know gold is being sold off on the higher time frame aggressively and you are in this seller's market from 1700 to 1250, which is over, you know what I mean, 5,000 pips, you know at the same time this is giving you signals that government bonds or global bonds are stronger, the faith in the global economy is stronger, most likely equities and stocks are neutral or performing well, right? And overall currencies like USD, GBP, they're performing a lot better, right? And the market sentiment of the mood is not as fearful, it's more optimistic. So gold can tell you so much from a higher time frame perspective on the history of the economy and how it's been run on fear and greed and how the corruption of what happened with the financial collapse played out, how they had to cash out. Very similar to what we're seeing now with this rally here. We could see it come a bit deeper and then a way bigger cash out by China and these major nations as they put that money back into their economy, right? It tells you a lot. And then when you're looking at it on a micro perspective, on a day-to-day perspective, if you're seeing gold hold bullish market structure, and let's just say the US stocks are low as well, and then you're seeing a lot of fear-filled headlines still related to coronavirus, you know that there's a higher probability that gold will be bullish because of the fear and these different cues you're getting from the equities and the structure, the technicals. It increases your confidence in a bias. Okay. But there's many situations where you have gold in a mixed state, similar to what happened here and what happened here in this month, where there's fundamentals behind the scene where if you don't understand the story behind the scene, it won't make sense. For example, the market is still filled with fear-filled headlines around coronavirus. So everybody's confused. Why the fuck is gold dropping so hard? Right? Because they don't understand the buildup that led gold to 1700 from 1100 and that what China was doing during the trade war. They don't, it doesn't make sense to them what's happening now about, wait, guys, I see coronavirus headlines every 5 minutes in the States, every 5 minutes in EU. What's happening? Why was gold sold off so aggressively on a mass scale, right? 1 second, guys, got a message. Okay, so why was gold being sold off on such a mass scale? Well, the story in our time of trading, besides what you guys understand historically now about that financial collapse and that market cycle, this was a market cycle, the recessionary period or a period of weakness, a period of distribution and consolidation, and then putting that back into the economy. Something very similar is happening with the economic cycle building up now and what we're seeing with real world events that are leading up to it. Okay. But in this situation, this whole piece of history right here, you have to understand that when the trade war first started, nations like Russia and China, who understand the historical repetition of our markets and who pretty much dictate the price of our markets, they were mass buying gold by 2 tons extra every month. Powerful countries, they increase their gold holdings per month at a steady rate. Most countries like the US, UK, European Union, China, of course, Russia, they're always buying gold every month. You know what I mean? But it's different when you're buying 2,000 pounds, 2 tons extra per month. That's a cue that something is coming, right? When you understand what I'm telling you about the principles that gold is mainly meant as a safe haven, and when the market is in fear mode, gold inflates. That's a major signal to see that China, a global powerhouse and one of the leaders in our economy, is starting to increase their. That's like you guys knowing a very great trader and he's saying and he's like, fuck man, I'm buying gold right now. I'm putting 100 lot on gold right now. You'd be like, wait, what the fuck? Why? That's you get what I'm saying? This is like when China started doing that to me, viewing the stuff as an economist and to many other economists, it was a signal like, wait, something's coming. Whether it's going to be war, trade war, something's coming to inflate the price of gold because China wouldn't be buying 2 tons extra for the price of gold to drop another thousand. You know what I mean? Why would they be buying 2 tons of gold extra here when price is dropping aggressively for it to drop another 1,000 pips? They wouldn't do that. They're not. They're smart money. They're the whales. Okay, so the fact that 10, 12 months ago, they were already increasing their gold holdings by 2 tons, Russia was falling behind them. This kind of stuff is not in mainstream media. There was headlines about it in Bloomberg that China's increasing their gold holdings, but they're not going to put that on CNN. They're not going to let the world know something's building, right? They're not going to show that stuff that China, the world, most day-to-day people don't even care about that or would not be fascinated or have any idea about that, right? But to us, that's a major cue. Then what did you happen after China started increasing their gold holdings? The trade war was the first catalyst that brought fear and uncertainty to the markets and the first catalyst that finally broke this historical resistance at 1350. Trump tariffing every country. Remember how everybody was scared? Like you have to understand how the market volatility and sentiment changes. Everybody's so scared about coronavirus now. But rewind your mind 12 months ago and think about how much panic everyone had over the trade war, right? Oh man, Trump's taxing them. Holy shit, Trump's doing this. What's he gonna do next? Man, this guy's crazy, right? That was the fear and sentiment that Trump was forcibly bringing into the market when he was tariffing other countries and taxing other countries. The reason he was doing that is he is trying to decrease the budget deficit by actually bringing real U.S. dollars into the economy by tariffing these other countries where he feels where he is feeling the U.S. has gotten ripped off for many, many years, as he said. Regardless, the China was already well aware that Trump is extremely aggressive and he's planning to do this, and that he was going to start a lot of trade drama with them in other countries, and that would negatively impact their economy in the short term. But they're thinking 10 steps ahead. Okay, they're already buying 2 tons of gold. So their gold holdings that they bought from 1200 when the trade war started already inflated to 1400. The next leg up after that, you had Brexit tensions in the UK and Euro. You had a lot of uncertainty in the Euro markets. You had the trade war impacting Asian markets. You had Trump going off about the trade war and the fear in American markets, and gold inflated again to the 1500s, right? While this is happening behind the scenes, the US has already also sanctioned Iranian oil because what is Trump trying to do? Like I told you with the tariffs, bring more money into the US. Iran, who do they sell oil to? China. China is a big consumer of Middle Eastern and Iranian oil. Okay? So when you have Trump now also, this is the second signal. You had the trade war going on and Brexit going on, and you had China buying 2 tons of gold here, trade war here. You're okay. You're like, okay, something's building. Okay, the U.S. is sanctioning Iran. Okay, historical repetition. Doesn't the U.S. love to go into the Middle East and raid oil or take out other oil players? Because they themselves are with Saudi Arabia, and they are pretty much an oil cartel and drug lord or oil lord, whatever you want to call it, right? Just because the U.S. has a lot of oil and Saudi Arabia has a lot of oil doesn't mean they're selling it all or they can sell it all, right? The China or other consumers, they pick and choose who they want to buy from. What is one way to narrow that down? Take out the other players of the demand market. That's what U.S. was trying to do by sanctioning Iranian oil and prohibiting people from buying it. But China, what did they do as the trade war was still going on? They did two things. China stocked up on Iranian oil, millions and millions of barrels backdoor against the US. They are fucking stocked up on gold that they already cashed out, and we'll get to that. And they were stocked up on gold, and they stocked up on oil, Iranian oil. Millions of barrels are still actively sitting on China's ports right now as we speak, ready to go, ready to use in their industry. As their economy rebounds now, and then when oil inflates, they're still going to have those barrels of oil. Okay? The US was furious about this. What did you see happen next in the markets? Saudi Arabia and the US starting to play games in the Middle East, move into the Strait of Hormuz, right? Move into the Gulf, and start causing conflict, starting to raid oil tankers or saying Iran is raiding oil tankers. Saudi Arabia said that Iran bombed one of their oil refineries. They're creating fear in the Middle East so they can eventually go in and raid. What was the third catalyst that inflated gold? And that went in line that we already had a signal that was going to happen when we saw the Iran sanctions. That was the Iran sanctions were our signal that this event was going to take place. What started off 2020? Everyone thought it was going to be World War III. Everyone forgot about that. That's how the media can take your focus off things, make you focus on what they want you to focus on, right? Everyone forgot that the world was about to go into World War III. U.S. was taking AC-130s in fucking Iran. You know what I mean? I don't mean to be so aggressive. It's just so interesting, right? That was the third catalyst that also inflated gold, brought some uncertainty to the global markets. That was when Dow Jones first started falling off of its highs at 29.5K. U.S. stock markets first started taking a hit. Everybody was wondering if a world war was going to begin, right? Iranian general was killed. Gold inflated to 1610 over here. And then boom, that shit faded from the markets. They made a truce. For now, that's gonna come back. Don't worry about it. Don't forget about these things. Don't forget that the trade war, that initial catalyst, is still active. Don't forget there's still phase two, phase three, the Euro-US trade war. Don't forget that all the stuff with Brexit, they still got to get their trade agreements. Iran tensions is still on the table. Saudi Arabia still wants Iran out of the market. What did Saudi Arabia do now to try to take back some of the demand? They started an oil price war. They said, okay, as a drug dealer, if I can't take my competition out, I'll just cut my price in half so all the customers come to me. And what did you see happen with oil? Drop, and gold inflated to 1700, along with what? Biological warfare from these coronavirus tensions and headlines, leading us to where we are now. Okay, something that we've also seen repeat in history with SARS, with Ebola, very similar impact on the market too. This was just exploded in mainstream media with how we have so much innovation and technology that information gets spread like that. It gets spread like wildfire, right? Propaganda is so much easier to create nowadays. It's so much easier to distract people nowadays and get them to focus on what they want. While the world was focused on buying fucking toilet paper, you know what China did? While they reset their economy, while they put their people back in place from those people from all those Hong Kong protests that were going on in 2019 about civil rights and human rights. You know what China did? Put them back in their place with coronavirus. They defeated coronavirus themselves apparently right now. China defeated coronavirus. They dropped global equities to lows. They cashed the fuck out of gold at 1700, and in 1 month, in 1 week, we saw it drop $200, right? 2,000 pips in a month, in a week that actual move was. We saw a mass liquidation of gold from those guys who've been stocking up, like I told you, from 1100 when trade war first started, when that fear was first in the market. And then they started bringing that into foreign investment and buying European equities, so shares in European companies, shares in US companies and stocks. As you saw Dow Jones do a 3,000 point rebound, right? Plus 2,000 to end the week, and as the feds are cutting rates. And while this is all happening and everybody's distracted by the coronavirus, and China did that, the rest of the world central banks, they got an excuse to cut interest rates. Where in reality, there's no difference between the finances of the world happening here than what was happening during the financial collapse. Nothing was fixed. When the financial collapse happened, nobody learned shit or did anything. They just repeated the same shit, right? Nothing was ever fixed with policy. Nothing was ever fixed with properly stimulating the economy and fixing growth, jobs. Nothing was actually fixed at the core because it's built on so much corruption and bullshit that the economy here is just as weak as when the economy was here. The budget deficit for the US is still just as large. The inflation is still way too crazy. So they needed a catalyst. They can't just blatantly say, hey, we've been fucking up for 20 years, world. So they're blaming the coronavirus, which every normal average person is just going to believe and have no idea what's really going on. While we just saw the biggest transfer of wealth in history with what China just did behind the scenes, we're just seeing some of the biggest corruption in history with all these central banks using coronavirus to do emergency 50 basis point cuts, 75 basis point cuts. Fucking the world's going to collapse. This financial market is going to collapse soon, probably in a couple few years, the way these clowns run it. It's fucked up. You know what I mean? The way I explained to you guys everything and how gold is supposed to work and how money was supposed to be backed by gold. And now you see how they just keep printing money, putting it into the economy, creating these catalysts, creating global tensions, how it runs on corruption and greed. It's fucked up. They're not running it smart. They're running it like retards, right? But anyways, that is how gold has gotten to where it is here. Now that you guys understand the fundamentals behind gold, the history behind gold, how it works, what brought it here, what was happening behind the scenes, and how it's used as an economic indicator, how it can tell you about fear and market sentiment, and so much about the economy if you really understand it, the historical repetition of our world, how it paints a picture on gold, and you can read it. And now we're gonna go into the breakdown. Okay, I'm just gonna grab some water quick because that was a lot of talking. So I'm just gonna pause the recording and then we'll start our fresh breakdown and we'll start looking at the technicals and what we can see come with gold and the higher time frames and down. Okay, just give me a second. Okay, let me remove all these drawings. Okay, so the way I draw key levels is and supports and resistances is by using actual conjunctions of candle bodies. So of course you can see that these areas will have some of the best reactions. So the way I'm going to show you guys this just by using monthly, weekly, and daily candle bodies, I'm going to show you how price for the last, let's just say 3 months ran through these areas without even looking at any of this price action here. Okay, so I'm just going to remove that. So we don't even know that exists, where those zones were, right? But that was just a big monthly candle. We don't know any fresh zones or anything in between that or what's going on. We are going to use this piece of historical price action and here, of course, on the monthly, weekly, and daily for candle body conjunctions, create zones and see how price flows through these. So after a lot of back testing, I found this out that using these hard, because this is where price is actually closing and opening for consistent. This is something you can validate. This is like, for example, this area right here, price closed exactly in like there for 60 days, 1827 on the dot. Price remained there or respected that area or broke below it for 60 days. Okay, that's hard body candle body fact on a monthly chart. If you go to a yearly, you can get even better levels. But I just put it. Sometimes these ranges are tight, but when you see it after, you're gonna see how price reacted to those areas very well. This isn't even like all the way up. We're gonna have to go down a lot further, but you guys will see. And if you look, like this is on the monthly, but some of these ranges, when you're looking and you're playing between these ranges, they're like 100 to 200 pip ranges, right? So price has really good reactions between them. This is obviously a nice zone here. Some of these fresh bodies, of course, is very good to use. So we got covered down to 1430. Just coming to see some of the price action here. Then you got some nice candle bodies there, but I'm using some of the historical points because we don't have all that information there in the near future, right? We're just using these historical data points. Okay, so I didn't round any of these zones off. I didn't do anything fancy. I didn't clean them up by looking at recent price action. You can see some of these zones, they're very large ranges, right? Like some of these zones are 100 pip ranges. Some of these are 115 pip ranges. Of course, they can be divided up a lot better. I'm just going to go on the daily just for some of these, just to clean up some of these. Like here, a great fresh zone that you wouldn't even need to know where recent price action is to see that. So now we're going to play those 3 months worth of price action and see how it respected some of these key areas just using those higher time frame bodies, right? So you can almost immediately see that you have great reactions to these bodies as there's a lot of historical data behind them or at these areas for a certain period of months, years, weeks. And like this is recent price action now starting January where we deleted that information and we didn't know about any of these fresh zones to try and create zones, right? And you can see some of these tight zones, how price plays with them there. See nice reactions at these areas, some of these wicks. Great range plays in between the ranges. Oops. Great, like ranges play very well. Look at this. Look at where this bounced off of, inflated to. Look at some of these wicks, and these are not even rounded off or anything. Like that was a tight zone for a reason. You had prices ranging there for a thing. Wicks off these key levels, how it plays the ranges. Great. All right, and there we are now. Okay, so even right now with recent price action, with the way price gapped up, it almost came to these previous historical points. And usually, I also don't keep my gold levels like this. I'll round them off. So this will be 1622. This is what I'm going to do now. This will be 1598. I'm going to clean up these zones, but that's just showing you guys why I use higher time frame candle body conjunctions for key levels of reaction, whether it be resistance or support. You know what I mean? And we don't like this meltdown. How would you create a zone just there or know what's really happening without having some of that historical value that we use? Okay, I'm just gonna clean up some of these zones. Also, I've already done this many times, but this right here, this is the cheat code levels. So by the end of this analysis, I'm just gonna pretty much redo these levels. But that's my gold levels from 1410 to 1800 using those principles I just showed you guys. You know what I mean? Okay. So I'm just gonna delete all these levels, but I was just showing you guys how I map them and how I go down the time frames to map them, and then how it plays even in recent price action. This principle of mapping zones can be used on any pair commodity. It doesn't matter what it is, because you're using real hard body price data, right? These are secrets you got to keep in Capital Hungry, because like I wish somebody taught me this shit when I was first learning. I had to go through trial and error, lose thousands of dollars, try hyper scalping, try swinging for a month, you know what I mean? I had to go try trading fibs, try trading EMAs. Like I had to go through everything trial and error before finding like what works with market structure or key levels or trend lines. So yeah. And if you guys use fibs and all that stuff, like that's perfectly fine. But watch my webinar on understanding lower time frame, because to me everything is relevant. Like the Fibonacci is showing me the same thing as market structure or trend. It's just some people see information or process information differently and easier. So if you process seeing a reversal at a certain EMA tap or a certain fib point, and that's easier for you to process, use that, right? Just use whatever works for you. Just don't flood your brain with retardation and shit. Okay, so let me delete all these because I want to show you guys we're going to look at market structure and stuff and everything that's going on, okay? Because now we understand what's happening here, that China did a huge sell-off, and we can understand when we're looking at the weekly here, that price has broken below some key candle body areas and is coming back into potential bearish structure if we do break below some of these levels. Okay, so I didn't mean to draw that trend line. Sorry, I was just showing you guys. I meant to do this just to show you guys that we are in very strong bullish structure, but you had very strong bullish momentum from the coronavirus fear. China did a major sell-off. I'm not saying we can't come back into break into these levels, but these previous strong levels of support have now turned into resistance, and we've had a very strong bearish engulfing candle as well. Okay. So recent price action is showing us potential more bearish structure to even come down into the 1440s. We had a very strong bounce off these candle bodies and level here. And I just want to start playing off the levels and see how price action reacts here, because if we fail to break above these key areas at 1574, 1560, I don't see higher time frame bulls yet. I would only see higher time frame bulls with extreme market fear, where I think for example, today in recent times, we just had Bank of England, Euro Central Bank, Reserve Bank of New Zealand, and the Feds cut rates, right? That would bring a lot of fear and uncertainty into the markets. But to me, it's evident that a lot of that fear and uncertainty has been priced in, where yes, we saw a quite aggressive 500 pip gap on gold, but in our current market conditions and volatility, that's not abnormal. You know what I mean? We saw gold pump to 1700 or like 1690 in a few hours, like do 800 pips. You know what I mean? We've seen bigger impulsive moves on gold with the fear behind it, whether it was coronavirus or when the Iranian general was killed and gold went to 1611. That was also like a 400 pip, 500 pip gap up, and it got instantly corrected. Okay. What I mean by that is this gap that we already had was already corrected. So we had, when you're just coming into the hourly now, and we'll come back to these time frames and work our way down. This gap, um, the gap was here, right? Price opened at 1627, gap to about 1570, and it's already closed that gap, showing me the volatility for bullish momentum is not there yet, right? And when you're also seeing from a retail sentiment, you can either look at IG clients, you can go look at Owanda. It doesn't really matter. They show very similar information. You can look at the non-reportable section of a COT report. The non-reportable section of a COT report also is, I think, is also just retail market information. It's so minuscule that it's classified as non-reportable on an institutional level. But like it's funny, makes sense. You know, we aren't shit. We aren't shit in the sea of the market. We really aren't. Okay, even if you make millions, like you really aren't at like I don't know. It's just crazy. This market's crazy. So 80% of the clients were long in this market and still have been long even during the meltdown from 1700. The way that China sold it off, the client sentiment was heavily in bullish. A lot of the fear was priced into the markets. You have China also showing headlines that they have combated and beaten coronavirus. It just made sense that this sell-off was happening, and especially that we didn't break this 1670s key area here when we had the break and retest on our previous analysis. You guys can go review. So this clearly is still very bearish structure. I'm just showing you guys that based on the weekly levels and this weekly engulfing candle that broke through very strong candle bodies worth of data. Okay, even though this is a big zone from about 1570 to about 1585 is a very strong level to break below, right? Using the principle of those candle bodies in days and weeks worth of price data that was sitting there and respecting that level. Okay, very similar to when we finally broke above here, you had an impulsive break. Just on the flip side, when we finally broke below this level, you had an impulsive meltdown, right? So it looks like we could get a retest and continuation down. So with that being said, what would be some of our targets or what would we be looking for? Because we can see that some of the interest rate stuff has already been priced in. So let's go just to the monthly here. That just because I want to highlight that price is sitting on a very strong support on the monthly. Okay. I'm gonna re-add my key levels in a second. I'm just gonna put the lines in and go by what I showed you guys in this chart. But I just want to look at some of the structure and stuff that I'm showing you guys here. So price is sitting at a very key support. If we break the support, very strong demand area based on these candle bodies at 466, we can put it at like 460 flat, right? Huge 500 pip range there if we start to break below this key area at 1515. Key safe sells for me just by looking at the monthly and by looking at the weekly and playing in this range and just seeing how the higher time frames translate to the lower time frames. Safe sells is below 1516. If we can't break back above this structure, that's your first technical confirm. If we see China continuing to rebound their economy, we see that these interest rate cuts have been priced in. We see that there's more, or any other coronavirus optimism in the markets, and we have those fundamental confirms. Plus we failed to break back above like 1560, 1565, and then we follow through to break below 1516 in this key area. We have a easy range play where we can play these ranges and levels down to 1460, no problem, right? In this area we are in now, I would just recommend that this is play the levels in between here and here from 1516 to 1575. Play the key levels that are already sent and just play price action based on these key levels as the market can range and develop liquidity before it makes its next impulsive move or decision. Long-term buys only above 1560 if we come back 1580 to be honest, right here, 1585, because we have to correct more than 50% of the impulsive drop. We have to validate some of the bullish structure, validate new fear in the markets, and that the interest rate scares are scaring smart money and the world economy is going to the shitter, right? Break above 615.80 here, and then we would have our confirms on the lower time frames like the 1 hour when we're watching price action and candle closures, plus the fundamental fear still holding strong in the markets by seeing like global equities, weak data throughout the week, or whatever else it may be, that can be validation for bulls and to hold above that level to see those previous highs. We really need a lot of new fear to see the previous highs and as we've seen it's corrected, okay? So in between 1516 to 1560, we're playing the key levels. Below 1516, 1 hour candle price breaks below this area and confirms of exhaustion on the bulls. Easy range plays down to 1460 higher time frame, right? 500, 600 pip range. And then bulls, you know what we need with fear and stuff as well. Okay, so with that being said, what do we have this week? Okay, we have US core retail sales, US retail sales, and US JOLTS job openings. We are going to look at this information closely because if retail sales does show some potential rebound and give USD some short-term strength, even better confirmations. This FOMC right now, by the way, has been delayed or canceled just in recent headlines. So I made this like earlier in the day. That's been canceled. Nothing I can do about that. You know what I mean? The Fed rate decision, obviously they just did it. So there's nothing else. Like all these fucking assholes just did it out of the blue at the same time, surprise in the first hour of market open because they don't want anybody jumping in fucking any moves ever. Cheap motherfuckers, man. And then US Philly, okay, US existing home sales and stuff like that. Okay, so pretty much just US building permits, and we're going to look at the retail sales information and job openings information closer to Tuesday and line that up with some of the price action, because if that data does have potential to rebound and give USD short-term strength, even more validation for gold to break below 1516 and come below our key levels of interest here. Okay, so we're just going to mark out some of our key ranges, and then I'll put all the levels in between after. So this is our just play the range. Just play the key levels and ranges, play the consolidation as markets fairly neutral, okay? That's our fairly neutral range. This is our bullish range. We would need price back above this key area. And then this is our bearish range. And if it breaks below here, you have that next meltdown. Of course, we would play the key levels down, but that's just, okay? And it makes sense with these candle bodies and what I'm telling you about these areas of interest and the fundamentals that can line up with it. Now, when you go down the time frames, it makes sense what we would need for bullish confirms. We would need price to break back. Sorry, that's the wrong thing. We would need price to break back into bullish market structure, technically, fully correct this drop and break back into bullish market structure, remain above our key weekly, above our key weekly resistance now, which was once a support. Correct the drop. So technical confirms would be this: correct the impulsive drop down, break above 1585, 1586, and hold that key level. Break above into bullish market structure again. These would be great potential buy areas here to see the range play to the previous high and test a new high if we have the fundamental validation of fear in the markets and really weak US data that can possibly come from the retail sales being a miss, which we have to look at those figures closer when the time comes. Okay? Those would be our confirms technically, and we would wait for the fundamental sentiment of continued fear in global equities dropping to play that range from 1600 to 1700 within our key levels that we have already got mapped out. We would just be playing the levels up, right? Otherwise, this current area we are in, I do not want to just take sells here out of the blue. Even if price came to retest this area at 1585, I don't want to take long-term sells. I might just take sells off the area of interest and reaction. This area, I'm just playing the ranges. I am not marrying any trades. I'm just playing off the key levels that I've showed you guys and that we'll mark out here and I'll send on the chart after. And I'm not playing any long-term gains as we have fundamental indecision in this area. I would just play this level. It's a 600 pip range level. You can easily play. Gold has done impulsive moves through it and has also consolidated in this level before, right? And it's a good level. 1580, 1528, these previous lows here, I would really need a break below there then to finally see a break and retest to play the range down to 1460 and 1400 flat if we break below there. That's what I see with the market structure and the technicals and the fundamentals on gold so far, okay? And why those are some key areas of interest. So this is of course messy right now. I'm gonna remark out and put these levels back on the chart. I just want to show you guys how I map out levels anyways. You guys got to see it in a simulation, how price plays through those levels historically, even with current price action and why. And then you guys understand my options and what I'm looking for to take out of this market and what I see fundamentally. And yeah, I'm just going to clean up the chart, label it and show you guys what I'm thinking and what we can take advantage of long term and short term. Any questions on the gold educational webinar and breakdown? Yeah, that's why I delayed it and took a bit longer because I wanted to eat because I wanted to make the breakdown a bit longer for all the new members so they can see my thought process and how I see the market and how I see gold and how I want to take advantage of it. Whereas we had a lot of the older members who have been in here, and so I run through breakdowns a bit faster just because they have reviewed a lot of the old breakdowns, and you guys should do the same. You should always review the old breakdowns, see how it played out, see how it didn't, and then see what we can take advantage of. So, any questions, guys? If no questions, I'm gonna assume everything made sense. Which time frame is the best to map out horizontal levels? Oh, fuck, man, I just fucking showed you that. I deleted my levels just so I could show you how to map out levels. But also, you have the candle bodies webinar. You have the educational webinars. You must be new. It looks like a new name. But any other questions? You have educational webinars on that and all that stuff. Yes, yes, sir. Man, just went through the whole thing. Right? So much disrespect. Okay, guys, I'm gonna save this and send it over, and then re-mark up the chart with these key levels that you guys understand how we put it down, and then what I'm looking for possible options as we are in a bit of an indecision state on gold, because we are in the indecision state because you have China massively selling it off and some other countries selling it off, but you also have a lot of fear in the European and North American markets and all these central bank rate cuts. So that's why we got stuck between this very strong support level here and then some of these key monthly ranges in this range here. So I'm just gonna be playing some of these levels. Yeah, if you're new members, I'm gonna send a testimonial thing. If you guys like the breakdowns and stuff after a week, let me know what you guys think. If the information is useful, if it's worth the value for like a few dollars a day, you know. Because once you absorb this information, understand it, and actually put in time to study, then you involve yourself in the trade room and do analysis and do the same stuff I'm doing every week or every day, and you understand you understand what's happening in our markets. Your confidence grows, and you execute better off these key levels and just profit a lot smoother and easier. But you have to put in the work first.